Hey guys, welcome back. DripCoach here with Drip and Farm for Poverty, where we don't trust, we verify, and operate with integrity and transparency. Today, we're diving into just a quick update on, again, the volume and what's going on in the markets, but a look from kind of behind the scenes at what the centralized exchanges are doing and kind of Bitcoin as a whole. So stay tuned. All right. I saw this article over on Cointelegraph and it made me think it's like, yeah, so we had these big red days in the market. You know, I think it said like 2 trillion from stock. Yeah, looking at Cointelegraph and their headlines, they had MicroStrategy, Coinbase down 24%, then 1.93 trillion wiped out of the US market. Where was another one? 1.2 liquidated in crypto. It's another red one here. Yeah, this one, 1.4 US stock. So just like all this kind of bloodbath, doom and gloom. But then I saw this article over here that said Binance saw 1.2 billion of inflows in one of the biggest trading days of 2024. So you're seeing this stuff get liquidated from TradFi, and it's like, okay, well, where else are people putting their money? Now, granted, we didn't have the same volume come out, but there's clearly a lot of people looking at crypto as a way to kind of hedge against that. So Bybit, Crypto.com, OKX net asset flows also increased 304 million, 107 and 97 in the last 24 hours. So that made me look over here at DeFi Llama, and yeah, for the most part, everything is green except for Bitfinex. I'm not quite sure what the hell's going on with Bitfinex and OKX for those 2 days or for the 7-day. But 7-day for everything else, for the most part, is green, like in the top 20. So there were large inflows coming into the centralized exchanges and very little coming out. So while the TradFi market was bleeding, and even crypto was as well, of course, there's still clearly a huge amount of people looking to get into this. And we know with the ETFs and wirehouses being approved, all this stuff, it's just going to continue. And that made me think back on the Plan B stock to flow models and stuff like that, and looking at the hash rate over time. So that's just, if you're not familiar, the hash rate is just a difficulty of how complicated it is to mine a block, and basically kind of relates to the amount of energy as well. And right now, the price is below the difficulty, or the hash rate, I should say. And when we get into the the bull markets, you can see these spikes, like this crazy one we had the double top in 2021. It's way above the hash rate, but there is the fair market value, or whatever it's costing the miners to actually mine Bitcoin. And you have this chart here that shows you Bitcoin average mining costs. And back last year, before the halving, the average cost was, $35,000 to $40,000. Well, when we go to the halving, it literally doubles. So it jumped up to 86,000 and 70,000, 69, 70. So the fair market value basically of Bitcoin is around the 70K mark, which is why we keep touching that, and then it kind of bounces off. But that just means that anything below this price of what it's costing a miner to mine Bitcoin, that just means it's the swing traders and not the long-term holders nor the miners that are selling Bitcoin to cause these sell-offs. Now, there could be some miners that are upside down. Maybe you got into crypto mining or Bitcoin mining, you took out a loan, thought you're going to make it rich, and all of a sudden you see that this isn't, the price is too high and you can't pay each month or whatever, you sell it off or whatever. But for the most part, miners are in it for the long haul, and they know that if they're selling below the price, like you see here, It cost 80,000 roughly to mine Bitcoin 4 days ago. And the average price on that day was 60K or so. So obviously a miner would not be, someone who's mining Bitcoin would not be trying to sell at those prices. They would be holding their Bitcoin until they can recoup enough Bitcoin above that price to, sell it off. So whenever we see these sell-offs like this happening from TradFi, or like they mentioned before, the Bank of Japan and what was happening with the debt and stuff like that, you got to look at the bigger picture and see what other people are doing, like the centralized exchanges, like the ETF holders now, and the Bitcoin miners and things of that nature. If they're not selling, then you shouldn't be either. So especially Bitcoin, since that is the king of crypto. So I just wanted to kind of bring that up in case you guys weren't familiar with some of these charts, because keeping all of this in mind and kind of looking at this allows you to make more informed decisions and not get shaken out when you see this volatility. Because yeah, it is rough. It's all happy-go-lucky. Everybody's singing sunshine and rainbows when we're at all-time highs and going up. And it just is a gut check whenever you get a 30% correction. And I think somebody in one of my comments on the last video asked, do I believe that there'll be another correction this cycle, or could we go lower? I think was the actual question. And I honestly do not know. I'm a 50-50 guy with that probability. The people I listen to say it's possible, but at the same time, I feel like, and I hate saying this because it's always like cliche, it's like, well, this time it's different. But I feel like that 49, 48, like just below 50 would be the bottom for this cycle, simply because, again, when you look at these prices. Now, these prices are, again, the miners, and that has nothing to do with people shorting the market, but there's not a lot of liquid Bitcoin on the market to move. And the more long-term holders that come in, then the harder it is to swing that, especially as the total market cap increases. So I'm on the fence. I still like 50-50, but I'm gonna, if I had to put a gun to my head and make a decision, I would say I don't think we see anything below what we saw just previously. Now that level could happen again, like we can go back up to 73, 74 and get another shakeout to 50 or so. But I just don't personally see anything even in the low 40s, below 45 to say. But I am by no means the guru, TA analyst, or any of that stuff. So do not take my word for it. But that's just my assumption at this stage based off of where we're at. And I make that again because it feels like it's different this cycle because of the ETFs, because of the political narrative with the US surrounding it, because of what's happening with the global narrative and other nation states adopting crypto, making crypto safe legislation, things of that nature. So it just feels different, but who knows? There's always some kind of crazy event that can happen where you get a black swan and something wild happens. So we will see. So the best thing you can do is have some dry powder on the side, get yourself on a centralized exchange and put a limit order in for, the low 40s, mid 40s, high 30s, just in case, And if that never happens, then you take that off the table. Like once we break, say 80K, I don't see us getting below 50 for sure, but we'll see. All right, that's all I got. Hope that provides some value. Just my random thoughts. If it did, smash that HBO special, help brother out, like, subscribe, comment down below. And until next time, live daily and achieve your impossible. See ya. Want to pay your in real life bills with crypto? How about send crypto directly to anyone with a bank account? SPRITZ Finance is a decentralized solution to be your own bank and connect your crypto earnings to real world bills and payments. They do not take custody of your assets and allow support on multiple blockchains and Web3 wallets. Sign up below using my referral link and you will get $50 back when you make your first $50 bill payment with crypto. Additionally, I will be using referral bonuses to airdrop, donate, or burn based on community feedback. Sign up now.